All right, let's get right into it. There's this huge myth out there, right? That investing is some kind of exclusive club for the super wealthy, that you need a giant pile of cash just to even get a seat at the table. Well, today we're going to tear that whole idea apart.
So let's just ask the big question right up front. Is investing really just for rich people? I mean, think about it. For so many of us, the answer we just assume is yes. And that assumption, it becomes the single biggest wall that stops people from building wealth before they even take the first step.
But here's the real truth. The thing that kind of flips the whole script, the rich didn't just wake up rich one day. A lot of them got there because they figured out a fundamental secret. They started investing early and they just kept doing it. And that's the playbook we're going to open up today.
Now, before we can talk about building wealth, we have to talk about the biggest trap that keeps most people from ever getting there. And it all boils down to this: confusing saving with investing. I'm telling you, they are not the same thing. They're not even in the same sport.
Let's just look at the raw numbers, because this is where it gets painfully obvious. Your savings account? Yeah, it might give you, what, a 2% return? Feels safe, right? But, and this is a huge but, if inflation is chugging along at 6%, your money is actually losing 4% of its buying power every single year. It's like you're running on a treadmill. You're sweating, you're putting in the work, but you're not actually going anywhere. Investing is how you hop off that treadmill and start moving forward.
This right here, this is the mindset shift you need. Stop thinking of your money as something you just park in an account. I want you to start thinking of every single dollar as a tiny little employee. And your job, it's to be the boss. You send them out into the market with one simple mission: go to work and bring back more dollars. That's the real difference between just saving and actually building wealth.
Okay, so you're on board, you're ready to put your tiny employees to work. So, what do? Let's get super practical with a simple 3-part plan that you can literally start using today, no matter how much you make.
These are our 3 pillars. We've got a simple budget rule to put your investing on autopilot, a core philosophy to keep you focused and out of trouble, and, believe it or not, a really clever way to get into real estate without needing a fortune. So let's break them down one by one.
First up, the 70-20-10 rule. This thing is brilliant because it's so simple. So 70% of your take-home pay goes to your life: rent, food, the usual stuff. Then 10% goes to building up that crucial emergency fund. But here's the magic number, that non-negotiable 20%. That gets automatically invested every single month. You see, this system turns building wealth from a maybe someday thing into a consistent automatic habit.
So what does that 20% actually get you? Let's say you take home just $2,000 a month. That means you're investing $400. Now, you put that into a simple index fund, getting an average 8% return, and in 25 years, what does that become? Over $300,000. This proves it, right? You don't need to be rich to start. You need to start to get rich. All right, on to strategy number 2. This one is all about protecting your money. Look, it is so easy to get sucked into chasing the hype, that one hot stock or that crypto coin that everyone on the internet is yelling about. That's not investing. That's FOMO, the fear of missing out. The smart play? Just ignore all that noise. You want to focus on things you actually understand, like index funds or ETFs. They're basically just big baskets holding tiny little pieces of hundreds of different companies. Simple and effective. And hey, don't just take my word for it. Warren Buffett, only one of the most successful investors in history, built his entire fortune on this one simple principle. If you can't explain what a company does and how it makes money in like one sentence, you probably shouldn't be putting your hard-earned money into it. It's as simple as that.
And finally, strategy 3, real estate. I know. Most people hear real estate and immediately think it's out of reach. But you don't need to buy some huge mansion. The concept here is called house hacking. It's so smart. You buy a property with more than one unit, like a duplex. You live in one half and you rent out the other half. And just like that, poof, your tenant's rent is now paying down your own mortgage and helping you build equity in an asset that's growing in value. It's a total game changer for getting your foot in the real estate door. So, we've got our strategies down. But what's the engine that powers all of this? What's the invisible force that turns these small, consistent investments into, life-changing wealth? Well, it's the magic of compounding. And this, my friends, is your true secret weapon. Just to put this into perspective, think about $10. What's that? A couple of fancy coffees? Maybe a lunch?
Pretty insignificant, right? But what if? What if instead you invested that $10 every single day into a simple portfolio that's just growing at an average of 8%? What do you think that would turn into over time? Over 30 years, that $10 a day becomes $450,000. No, it's not magic. It's just math. Your money starts earning money. And then the money that money earns starts earning its own money. It creates this incredible snowball effect that just gets bigger and faster over time. And here's the part that should really blow your mind. Of that final $450,000, the money you actually put in from your own pocket was only about $109,000. The rest of it, over $340,000, was pure growth from the market. That is your money working for you. That is the insane power of compounding. They say Albert Einstein himself called it the eighth wonder of the world, and he said, "He who understands it earns it. He who doesn't pays it." By investing, you're finally putting yourself on the earning it side of that whole equation.
And look, this isn't just some abstract theory. These are real people. Take Emma, a teacher who started small, just $100 a month into index funds. She's now making thousands a year in passive income. Or Marcus, an Uber driver who used that house hacking strategy we talked about to build up a real estate portfolio worth $500,000. These are normal folks who just used a simple plan and stayed patient. But of course, knowing what to do is really only half the battle. You also have to know what not to do. There are a few really common mistakes that can just completely derail your entire wealth building journey if you're not careful. So here are the big 3 to avoid. First, trying to perfectly time the market. It's a fool's game. Don't do it. Second, panic selling the second stocks take a dip. All that does is lock in your losses. And maybe the biggest mistake of all, just waiting on the sidelines for the perfect time to start. The best investors will tell you it's not about timing the market. It's about time in the market. That's where the real power is. So we've covered the mindset, the strategies, the incredible power of compounding, and the big mistakes to avoid. The only thing left is for you to decide what's next. Because, knowledge without action is, well, it's just entertainment. So I'm just going to leave you with this one question. Now that you know the secret, you also know what it costs to wait. Every single day that you don't start isn't just a lost day. It's decades of lost growth that today's investment could have created for you. You've heard the saying, the best time to plant a tree was 20 years ago. Well, the second best time is right now.